Good morning, traders. Welcome to the Stock Market Morning Prep video for Tuesday, October 6th. Two big days in the market on Friday. The market participants really liked the job number, or at least lack of the job number, and rallied the market really hard on Friday. We did get a little bit of follow through on Monday. Now we're up about, I'd say, close to about 90 S&P points in 2 days. Absolutely insane, which would take weeks and months to do back in the day. Now we're rallying 30 to 50 handles a clip. So volatility is here. It's actually a good thing because that creates opportunity. However, you know, when you get the extreme, sometimes it's not really the best, because when you're waking up in the morning, you see the market's up already 15 to 20 handles. There's a little bit of lack of opportunity when you're a day trader. However, we do see that the markets are humming, and I'm excited about that. So where do we go from here, right? So we're looking for continued weakness. I do think that we get a little bit further declines in the market before the end of the month. It looks like to me that buyers are mid-range to the upper end, and sellers are lower. Not a good sign if you're not in a trending bull market, so you have to be careful with that. To me, doing the market analysis, I'll show that to you in the daily chart, looking to probably start looking to short the market anywhere into that 2000 in the ES, or that 200 area in the spiders, which I'll show you. I want to show you a couple of indicators. S&P AR50 stock, S&P 500 stocks above the 50-day moving average. As you can see here, we're still trending lower. Bearish symmetry, lower lows and lower highs. You can see we're at the 40 percentile. So we need to really break out and start really trending higher. And we're already seeing close to overbought readings in the RSI and the MACD. But again, you can see here that we clearly need a lot more work to define that this bull market is intact and moving higher. So I'm really skeptical as far as the market's concerned here. McClellan Oscillator, very reliable indicator reading overbought, oversold conditions in the marketplace. We're at 58 already in 2 days from negative, I believe it was 49 or 50, and now we're positive 58. So as you can see, 2-year chart here, anywhere we get into that 60-ish or above, we become overbought. I mean, RSI and MACD still pointing higher, not yet quite overbought, but you can see here, guys, clearly the overbought reading is coming and is apparent. So we want to look to tighten stops if you guys are long and you swing traders. But again, I'd like to see another push up to extreme levels where we could start looking to short the market into resistance. Okay. Now let's take a look at the daily charts here. Here's the spiders. You can see what I'm saying above the. We just tagged at 50%. We're into this resistance band now, and 61.8% from the August 24th low comes into about 201.66. So anywhere into that 200 area or the 2000 area in the ES, I would look to start shorting. Find a spot, dial down to the chart a little bit to your time frame, 15-minute, 5-minute, 30-minute, whatever it is, and look for some areas of resistance and failure and look to short that market. That's what I'm thinking about doing. I won't know until we get up there. We have to measure and gauge what type of rally we have. Is it on heavy volume? Is it on light volume? So that all needs to be taken into consideration when you're looking to do so. Okay, take a look at the IWM. Again, clearly the weakest. One of our leaders, our secondary leaders, not doing well, although it did have a huge 2-day move to the upside. Again, still in this downtrend channel or downtrend area of lower lows and lower highs, again with the bearish symmetry. Okay, and now we're coming right into this resistance band again. So do we look bullish? Absolutely not. The charts are technically damaged. The weekly charts, the monthly charts do not look good. We had 2-month closes below the 20-month moving average. I showed that to you in the video last week. So if we continue to stay down below that 20-month, then I would suspect some further declines here. And you can see, let me just show you the weekly real quick. Here's a weekly spiders. Not to go back and forth. You can see what we're doing is just really back testing and just creating another bear flag here on a weekly. So we do have some technical damage on the longer term time frames. So I just want you to be aware of that. Put that into perspective in your trading plan. Okay, now let's take a look at the transports, our leader. We did gain a little bit of strength. Transports are coming into seasonal strength at the end of October and goes all the way through into the holidays. So this is a good sign that that investors start snatching up some of the holiday plays. Also, consumer discretionary is also looking pretty ripe for a move higher. Okay. Now, once this seasonal weakness ends, which comes into play right into the third week of October, then we'll start looking for some long ideas. Okay. Take a look at the diamonds. As you can see here, rallied up real nicely, and that it closed above its 50-day moving average. But if you look, we really haven't really gone anywhere other than now this little sideways consolidation here. Okay. And coming into resistance as it is. Take a look at the Qs. Lastly, the Qs. Technology doing okay. We had some really big moves in Amazon, Google. Apple was a little stagnant, and again, their numbers weren't so great. Their iPhone sales. So let's just keep an eye on things. Keep an eye on some of the bigger players like the Amazon, the Google, the Priceline, Tesla. These are some of the market leaders that rallied in the bull market. And if they're starting to falter, you have to really be careful here. Also, watch the VIX. VIX actually starting to come in now. Real nicely, which is good, but we're in this neutral zone, right? You know, anything above 21 or below or right around the 12 area, that's really the extreme reading. When you're in between that, it's really just kind of neutral. I do think markets are still a little overvalued, and I think that the markets, the S&P, should be in around that 1890, 1850 to be fairly valued. So let's keep an eye on things here. Watch the indicators. We'll see what happens for tomorrow. Have a great day, everybody. Be safe, and we'll speak to you tomorrow. Take care.